Hello, YouTube. Is there going to be a soft landing and no more rate hikes? That's what we are wondering after we see that it appears like a soft landing might still be possible with high growth and low inflation. Every number coming down with a miss. Tom Lee appeared like he was right. So as we look to the chart, what's really interesting is that we're actually gapping up again, like we did back in June, like we did back here in early June, like we did here, and we actually filled this one. The question is whether or not we're actually just going to keep advancing from here, or if there's going to be some consolidation. So please stay tuned. And in today's video, we're going to walk you through everything you need to know. I'm going to ask you for a huge favor, please, and thank you too. If you could, consider smashing that thumbs up and subscribing to the channel. I would greatly appreciate that. All right, so I'm going to pop over here to the ES because I want to show you something that is very, very interesting. What I noted to our pre-market group, again, link in the description if you want to join us for 14 free days. I went over this on our pre-market stream. So yesterday I said that I was quite confused whether we would go up or down. After the weekend, I said we were going to go downtown. I thought that I was wrong, and it appears like that was a pretty good call. Why? Well, because we're in a new 52-week high right here. But what I want to pay attention to is one level here. We're going to take the horizontal line. We'll take a magnet, and we're going to snap it right here to our high at 4498. Why that level? Well, because we advanced into it, into the headline CPI number coming out. We backtest on the second candle to 4498 and get a bounce. That's roughly 445 on SPY. So we hit that 445.0 area, or 4498. We hit it again, and then we form a higher low. So what happened here? A low, double bottom, higher low, and we got those lower highs, which means we're really forming a triangle. As that triangle gets formed, and we're trying to be a little bit objective, it's actually very, very peculiar. Why? Well, because yesterday we showed you that with a simple line chart, a humble line chart, we noted that if we delete everything here now, we had a cup with a handle, and then we got the finishing part, which means a new high. So that is really good for the bulls. Let's go through the data and see what is supported, because there is actually two more things I want to go over. What's really important to note with ES versus SPY is that our Fibonacci levels, or that math stuff, we're going to be hitting our 78% retracement on ES before we hit it on SPY, which means 4529.25 is the magic number. We got to 23.75. We got awfully close, but not quite there. So we're within about, I don't know, like as of right now, about 20 points to hit that Fibonacci level. And if we do, I'll be watching really closely. And the reason why is because if S&P is SPY, which we often track, is going to make a run for 450 plus, we're going to have to claim that area on ES first. So 78% retracement for SPY is here at, it's here at 45176. What's going on here? Let's hide that. The other thing I would note here on the weekly chart is that as much as I felt on the weekend we were going to go lower, before we actually had these headline numbers here, the one that was missing was actually CPI. All I saw was month over month. I thought that when we went here, hey, well, we're going to print a lower low. We're going to fade it. Instead, we're actually up, and we're over previous weekly highs as of right now. So as long as we remain over 444, it's actually 444.3. We're over all the previous weekly highs. We have a hollow candle, which means it signals the expansion is continuing, and we have no lower lows. We have a higher low. If you remember what we talked about on Tuesday, we said that if we maintain that low, would this level make sense in hindsight? Well, as of right now, it does. It's 437.50. It's a nice round number. And as of right now, it looks pretty constructive. Let's look over at QQQ. Let's look and see what this tech is doing. Oh my goodness. Turning point number 2 appears like it is a bull pivot for now. Let's not call it a win until we close the candle out on Friday. But we also did make a new 52-week high by claiming our relative high here at 372.85. We got to 374.15. Look at QQQ flex. All right. Let's look at two more things here, because I want to look at the dollar. Then I want to look at treasuries. That's right. Damp it. New 52-week low on the dollar. That is very supportive of stocks. What's very interesting, though, is that the dollar is down by 1% and S&P is only up by 0.8. So S&P should have actually been up more. Why? Well, let's look here. The DAX is actually up by 1.5%. So something seems a little odd here that the DAX is rallying more than America. That seems a little odd. Why? Well, because gold is up 1.3%, basically tracking what we would expect from the dollar weakness, but Bitcoin is down and Ether is down. there was some rumblings regarding Grayscale and their spot ETF, sorry, their futures ETF, and that might have caused a little bit of the volatility. There's not yet warning signs for Bitcoin. There's a massive bullish pattern over the 50 MA. It's just notable that the dollar's down and Bitcoin's down when gold is up. People like that boring, safe stuff right now, it appears like. We can also look the 2-year note. Got a pretty nice slam here. That's part of what I mentioned on the weekend. We note the 2-year note is down. The 10-year note is also down. So if we look at the inversion, it's actually starting to march back up here. So if you want to know more about that, stay tuned till the end, and we'll go over and we'll have that weekend deep dive for you queued up on the left-hand side. VIX also got a crush down by 9%, all the way down to 13.53. Reminder, in the low teens, it means the market thinks there is nothing to worry about. There's no dangers ahead. There's no need to buy insurance. We're just going to go to infinity and beyond. So when moon, well, when Mars. Here we go. At a high level, that's what I wanted to go through. We can also note that mega caps got a big boost today. NVIDIA's making an investment into an AI play. New 52-week high here, I believe. 439.9, 439.35. It is roughly double topping now. Let's see. Oh, after hours, it's over 440. There you go. Meta's also pushing up dramatically on the Threads announcement that they're the fastest growing platform to 100 million users. Apple, Microsoft, Google, all up. Google also announcing that they're going to be entering the cybersecurity space, software as a service. All right, I think that summarizes most things. The only ETFs that are down today are going to be insurance. Sorry, this is an insurance ETF. That's interesting. Gap up flush, and then XLV. What I want to focus on, though, is going to be ARK, because we've been talking about this for the last about week or so. I'm personally in the trade, full disclosure, like I mentioned before. We're currently up by 8.5% on the week. It's been a terrific move. And this is part of what I will be personally watching for, along with Bitcoin, to know whether or not there is still that exuberance into the market. We're forming a W here. We cracked the spell by breaking the lower high pattern. We broke that this week by getting above roughly 46. And this looks pretty good. Building a pretty solid base here. Volume looks pretty bullish. And as of right now, if ARK can catch a bids, it means that the bears are having a hard time holding down the most hated names. That's right. Kathy Wood might be making a comeback. All right. So soft landing. Please make sure to drop me a comment. Tell me what you think. All right. Pushing forward here. Let's look to the data, because there's also an important number to look at tomorrow in regards to whether or not we're going to be getting a gap fill, or if we're just going to leave it and march even higher. So we look here to every number was a miss, which means red numbers are bullish. Bad data is good. We note that we had core down at 0.2. The notable one, though, is headline CPI coming in at 3. But here's the thing I'm looking at going into tomorrow. I'll be watching not only the number, but also the reaction. As a reminder, people produce things. That's the PPI, Producer Price Index, and then consumers consume. So people produce, consumers consume. So when they're producing, if their cost goes up, last report, meaning in May, it was a negative 0.3. Now we're expecting that to go up to 0.2. So that is a leading indicator for CPI. We can also note that we're going to get initial jobless claims. But if we think about this number, I don't know what the number is going to be. What I'm more interested in is going to be the reaction. I'll talk about that right now. And then I'll flip over to the fear and greed, and we'll talk about that. So if we look here to the S&P, there's two things I'm watching for. So I'm going to go back to full candles for people who have a hard time seeing on mobile, or who just don't see the hollow stuff very well. If the S&P is going to remain bullish, in my opinion, all we have to do is remain above 445. Why? Because whatever the number is tomorrow, negative, positive, beat, miss, who cares? We also have the Bank of Canada. They said they're going to be hitting their inflation target into 2025, delaying it by 6 months. So there's your higher for longer, 23, 24, and into 25. So we look here to resistance. It's clearly here at 444, 4439, 4443, 444.0. If we remain above 445, it means we've cleared the resistance and it should now be support. What was resistance will often turn into support if we're taking a fresh leg higher. To where? Well, to that Fibonacci number we talked about at 451.76. So if we remain above 445 tomorrow, that's right, even if we get a red day, I believe we could be heading to 450. And we're already up by 7.5 points on the week, which means we only really need about another 2.5 to get that 100 points on SPX or 10 points on SPY we talked about on Monday. All right, if we're gonna get a bearish reaction, here's here's what we want to watch for. Here we go, and then what we still need to do is make sure that we are understanding that everything is subject to, right? So subject to the reaction. Here we have a doji. It looks like an island, right? Is it going to be an island reversal? Well, the volume is giving me a little bit of right, a little bit of a flash here. S&P versus dollar is a little bit, but who cares what I think? If we're going to go down and fill this gap, because we have left gaps before, but we've also filled some. So this one is left unfilled. This one is left unfilled since we started our big rally. This one here is also unfilled. So we got multiple gaps that are not filled. We filled one so far. Sorry, yeah, two. We got one here and then one here that we filled. So if we're going to go down and fill this gap to test and see if our uptrend in 442 is still strong support, I would expect we're going to get a dip down into tomorrow. We're going to fill the gap. And when we fill the gap, what do we do? Why? Because remember, I showed you on the ES at the onset of the show how we got those higher lows formed. So what I would expect is when we come down, I would expect immediate buying on that fill at roughly 443. So when we hit about 443, 442.9s, I would expect an immediate bounce. If we can reclaim 445, that's a gap fill and a reversal to go back up higher. If we come down here and stall out, that's not good. We want to see people coming in to buy immediately at this area. Why? Well, because if they don't, and we come down and we lose 442, again, a lot of ifs, well, we lose our uptrend again. We had a false break last time, which looked like it was a trap, but losing it for a second time just means that momentum is starting to wane. We could be going lower. All right, is there any more evidence we can look at to see if there is any edge for one team or the other? We know we ticked higher by 1 point from 79 to 80 here in greed. However, we did not make a higher high in terms of the high we established here on June 30th at 83. So I really want to see that 83 taken out with conviction if we're really going to be squeezing higher right here, right now. Most stocks are doing pretty good. But what I want to pay attention to is going to be the 4-hour chart here, because you can note that it's really the open, right? The open drove most of the gains. They're mostly gray or a little bit red, right? We'll call it flat into the second half of the day or the afternoon. So when I look here, I think it really comes down to that number that comes out tomorrow. And then finally, we want to also make sure that the leaders, meaning the trillion-dollar companies, are still very strong. They're still pushing. And with that said, we wish you guys all the best of luck. We look forward to seeing you tomorrow. And if you want more context in regards to how this week shook out, I encourage you to watch the weekend deep dive now queued up here on the left-hand side. If not, thank you so much for watching, and I look forward to seeing you tomorrow. Thank you again.